Hi traders, welcome to the Ken Tank, where you'll learn how to avoid getting eaten by the sharks on Wall Street. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold. Hello active traders, this is Ken Calhoun, president of Day Trading University and TradeMastery.com. In this episode of the Ken Tank, we're going to look at volume confirmation for breakouts, because it's so important that you have institutional volume behind your trades as you're starting to get into it to avoid false breakouts and to get in on those that are likely to continue. One of the things that I wanted to mention in this chart, JEC is the ticker, is not the obvious breakout that you see over here in the high volume, but the early lead indicator of strong volume that's 15-day high volume that preceded the breakout. One of the things that you run into oftentimes, at least I do in my own trades, I don't know if you have the same experience, is that often you'll find a chart that's already ran up a bit and you may be a little late to get in. And so to get an early lead indicator that you're likely to see a good breakout that's going to continue, looking for an early sign, a clue, kind of like a poker tell, if you will, of volume that's exceptionally high, strategically higher, significantly higher than previous days' volume, can give you a clue that institutional accumulation is underway. Then you just set a long trigger above the previous high of that day and you often get in on a nice continuation breakout. Now a chart like this is ideal for continued moves up because of the continued price action, 45-degree angle type breakout and high volume as well. But whenever you're looking for a breakout in a chart, make sure that you've got volume as a lead indicator ahead of time before you get into the trade. Let's take a look at the daily chart on this. What's going on in the story of the candles? Well, obviously we've got a bullish cup breakout with a wide range candle. And this is one of my favorite chart patterns, is high volume candles at the right side of a congestion or a bullish cup pattern that often leads to additional breakouts, as we saw in both Thursday and Friday's market. So nice high volume breakouts are really a cornerstone for professional traders, and I encourage you to use that as kind of a safety filter as you're looking through charts that you're considering trading in your own trades. Make sure that you are looking for volume confirmation for entries before you get on a breakout so that you avoid false breakouts. And also is a good lead indicator that something good's about to occur in that instrument you're ready to get in on a trade for. Let's take a look at a couple of intraday charts. These are also good to put in front of your swing trades as a guidance or a tip that something's going to break out to continued new highs. Oftentimes you look at day over day deltas or changes in the opening range breakout volume of an instrument. That's a good professional floor trader's tip that I learned back in the 90s, and as one of the original .com day traders, widely imitated, never duplicated. One of the things that I look for is what is the volume doing on the trade day compared to the previous day on the open range. And you can see here a nice 2-day breakout with open range volume that's higher on average, just slightly, but enough to get me in on the trade, higher than the previous day, and that led to a new breakout. Another good chart here to look at is SPWR, another good example of one of the solars that had an exceptionally strong open range breakout that then came all the way back down to support. The tell is, one of the things I look for is, what's the last previous session's 15 to 30 minute high-low closing range look like? And if you have a engulfing type of price action pattern where it comes from below that price, traverses that, and then gets above it on high volume, as we saw was the case here, that often leads to a really good open range breakout. So for a good quick day trading scalp entry, this is good for a 50-60 cent run, a full point it ran before the pivot, but you get 50 to 60 cents. I like to go for 50 to 60 cents out of the, I don't get the exact bottom or the high, I get a piece in the middle here. I like to go for 50 to 60 cent profit on a open range breakout day trade when confirmed by a high volume move. And you can see the price action in this is confirmed or supported by the volume that was low on the 5th, which is Thursday. You can see we had much higher open range breakout volume on the 6th, which was Friday, and that led to a nice move up. Last day trading chart to look at, which is a better one, my preferred play is this type of chart. We've got a minor gap continuation, again confirmed with much higher volume than on the previous day open. See all the air here? There's no volume here. It's just choppy sideways, do nothing. Oftentimes a gap will produce a large volume breakout continuation. And one of the ways that I like to trade those, as I teach in my live room and other resources, is a bullish cup following a minor gap. So you get a minor gap. Make sure your charts are set to show pre-market, right? So that your charts show data starting at 8:30, so you can see the magnitude and the directional play in the gap, and if buyers are coming back in, you stay away from it until it takes out new highs, and at that point you hammer away at a long when confirmed by high volume, as we saw here, and that ran up a nice point or so, 24.5 or 2 points, all the way up to 26.5 into the close, but a point on the open, and that's where I trade, is the open. So anyway, look for volume before you pull the trigger on a trade, because what you don't want to do is get into a choppy trade that has price at new highs but no supporting increase or delta in the volume. A good, intelligent, professional approach, whether you're day trading instruments like Yelp or if you're swing trading instruments like this JEC chart, you're looking for a good cluster of significantly higher volume, especially important in today's market. So anyway, I'm Ken Calhoun. Hope this quick tip keeps you out of trouble and in on successful winning trades moving forward. Look for both price and, especially in a declining or choppy market as we've had recently here in early May, make sure that you're looking for volume confirmation before you pull the trigger on a trade and make the best of your trading decisions. So best wishes for successful active trading.